Welcome back to the channel. We got some trending news from Twitter today. Michael Burry. Michael Burry is currently trending on Twitter. What are his latest moves? For those who don't know Michael Burry, by the way, he's a investor, hedge fund manager. He's the guy in the Big Short movie that sort of predicted the whole collapse thing. So he's kind of big. He's kind of a big deal. Runs Scion Asset Management. He's kind of a big deal. People do follow his trades. But yeah, anyways, right now he's currently trending on Twitter. Check this out, guys. He has sold out of everything. He has sold out of a bunch of companies except for Estee Lauder. Why? Michael Burry, Scion Asset Management, sold Alibaba, Baidu, JD.com. A lot of the Chinese companies he's sold out. Oscar Health, Canada Goose. He has Estee Lauder. He added 100%. Estee Lauder? As you can see, after hours for Estee Lauder shooting up like crazy. Currently up 7%. Peaked at about 68 after hours. Looks like it's calmed down a little bit, but why Estee Lauder? I mean, we're going to check it out real quick today. But yeah, $63, $22 billion valuation. Looks like they have a 2.2% dividend. I mean, let's check out the numbers real quick. Okay, Michael Burry, why are you investing in Estee Lauder? Why? I mean, just looking at my quarterly fundamentals real quick, this is kind of where I like to start because I like to see how companies are doing recently. This would already be a no for me just by looking at all this red, but there's definitely something I'm missing because he's definitely way smarter than me. He must know something that we don't. But again, let's just take a look. Total revenue, earnings per share, pretty much for the past year have been down. The latest revenue, they posted 3.5 million versus 3.9. That is down 9%. And as you can see for 2024, it's pretty much been down the whole year. Year over year, it's been down the whole year. Earnings per share, all of 2024, down quarter over quarter. Not looking good. I mean, even these ones, when you take a look at second and third quarter, earnings per share down 777% and down 577% year quarter over quarter. Those are some really bad numbers. You do not want to be buying a company that's dropping heavily on revenue and earnings per share. Profit margins seem like they're intact. Free cash flow per share looking pretty negative for the past year. They posted 0.45, down 55% compared to the previous quarter. But yeah, 3 quarters of consecutive negative decline in their cash flow generation. Not good. And of course, net income, bottom line, they posted 159 versus 330 from last quarter. That is down 51%. When you take a look at the 3 previous quarters before that, I mean, it's down it's down year over year, minus 288%, minus 603%. I don't know, guys. This is an instant no for me just by looking at the quarterly data, but Michael Burry is smarter than me, so I don't know. There must be something I'm missing. Let's take a look at some of the qualitatives real quick. Again, it's moving after hours. Peaked at about 68. There should be some excitement on this stock tomorrow morning because people are going to be following his trades, but what do you see in this company? Estee Lauder lays off 2,600 workers out of its 7,000 target. Wow. They're going to lay off 7,000 workers. So it looks like this company is going to try and turn around. They're going to be cutting a lot of operating expenses just to improve that bottom line. That's what it looks like with this layoff of 7,000 workers. Let's read through some of this, the latest transcript that they posted. All right, check this out. So latest organic sales declined 9%. Our business, excluding travel retail, decreased 3% organically. A sequential improvement from the 4% decline in the second quarter. Travel retail declined 28%. This company is not doing good. So travel retail continues to shrink as a percentage of our business towards the low teens. Diluted earnings per share decreased 33%. And they're saying that's far better than they anticipated, but it still decreased 33%. Michael Burry, what do you see? What are you seeing in this that I'm not seeing? I could see that they are going to do a turnaround play, though. If you take a look at the long-term chart for this, I mean, that looks pretty good. The chart looks like it could be a good turnaround company. I get it. So when you take a look at the max, the chart does look like it could be a turnaround play. So $60, it's pretty much the same price it was back in 2013, 2012, 2013. So it's been over 10 years. Guys, what? So this company is the same price that you could buy it at, that it was selling for in 2012, 2013. December 2021 looks like it was at a peak. Can you imagine? It was at $370 and just straight down to $63. Same price it was selling at in 2012, 2013. Maybe Michael Burry does have something. This is good to look at. Okay, let's keep going. So as of April last month, they are currently doing a restructuring program, so they are going to fix those operating costs. They have reduced over 2,600 positions, and they are streamlining their middle management position by 20%. All right, so that's a lot of expenses they're going to cut off. That sounds good. That sounds good. They expect a steeper decline in net sales. Move number one for them is to cut costs. Looks like they're going to fire a bunch of employees. So they're still making $15 billion in revenue. They have about $2.6 billion in cash and $7.2 billion in long-term debt. Whoa. Red flag, red flag. That is a lot of long-term debt. And it's been increasing every year for the past. Their long-term debt has doubled in the past 8 years. So that's a huge amount of debt. I don't like companies that have a lot of debt. Cash flow from operations is positive. That's good. But it looks like it did get cut in half, pretty much in half since 2021. And yeah, you could see the peak. So 2021 was pretty much the peak. And it looks like the stock just catered after that. It might take a little bit of time for this thing to play out. But I guess it is at the low. Let's check some insider trading. Oh, look at this. Lots of insider buying. I like that. All right, guys, we might have something. Hold on. We like this. So multiple directors are purchasing. The CFO, the executive vice president, the director are all buying shares. I would like to see some bigger share buybacks from more directors or more officers. And I would also like to see them talk about share buybacks or something before jumping in. But then again, it is Michael Burry. It is Michael Burry, guys. He knows more than us. He's smarter than me. I don't know, guys. What do you guys think? Is Michael Burry making some good moves? I mean, he usually does, right? I mean, but then again, his last good move was 2008. So maybe keep an eye on the next couple quarters to see how the operating expenses are improving, because they are going to be laying off 2,600 up to 7,000 workers is their target. They're going to lay off 7,000 workers. That's a lot of people. So in the long run, definitely they are going to be saving a lot of money on expenses, which is going to improve the bottom line. So this is definitely a turnaround play. We're adding it to the watch list. So anyways, let me know what you guys think in the comments below. If you guys like this video, please give me a thumbs up. If you like Michael Burry, comment Burry. Let's see if he's right, guys. Thanks for watching. We will see you on the next one. Michael Burry.